Thank you so much, Raj, and thank you very much, Rusha, for that poetic introduction. Indeed, very unique, indeed, very creative. Good evening to all the dear CA students, who are attending this webinar. As we approach the very busy and demanding bank branch audit season, it is a very good initiative that has been taken by the BCS Student Study Circle. Before we dwell into the subject, if the question answer box, if that is active, I just want to have a couple of questions. First is just type a yes if you are a first year article who's never done any bank audit, who's totally new to the concept of bank audit. So if the Q&A box is there, is active, is enabled, I request everybody to just put in. Okay, so we have a couple of yeses.
In the chat box, they can put.
Oh, in the chat box. Okay, so we have some people putting in. Okay, okay. All right, all right, all right. Raj Patel, Kajol. Then we have Manish, Mohit Sharma, Praveena, Pallavi. Okay, okay. That's quite a few. Okay, excellent. Yashwant Tejasvi, Krishna Lohia. Yeah, okay. And then Ida, Mitali. All right, great, great. Thank you so much, everybody who's responded. So we do have quite a lot of people who are doing it for the first time. I'll pose my second question. If you are from a location other than Mumbai, I would just want to know. So you can, if supposing you're from Delhi, just put in Delhi, or if you're from, say Chennai, just put in Chennai, so that I just understand who is from, which location. Ahmedabad, Delhi, Rajkot, Vijayawada, okay, Morbi, Ahmedabad, Pune, Patna, Gorakhpur, Haryana, Delhi, all right. Wow, okay, Chennai, Hyderabad, Erode, Nagpur, nice. Vijayawada, Jabalpur, all right, okay. So this is just to understand the geography of students who are attending this webinar. Thank you very much for all those who've responded. And I welcome each one of you. I hope this session turns out to be fruitful for you and gives you some helping edge to, conduct your audits more effectively, more efficiently. Now, before we start, also, I want to explain, I'd like to inform, those CA students who aren't aware that BCS is a 75-year-old voluntary body, which was formed exactly after 6 days of the constitution of our ICAI. And it undertakes various technical and non-technical programs for CAs and CA students to enhance their knowledge and skills. So I implore each one of you to make the most of this for a holistic development. Now, as you're aware, topic for today's discussion is Bank Branch Audit from an articles perspective, which is being presented by Sonal, who's a second-year article in our firm. Now, the idea of having this webinar is to break down the process of Bank Branch Audit so that you all can participate and be a very positive contributor to the process. Now, while your partners or managers, they will ensure adherence to RBI circulars, various applicable laws, or even standards of audit for that matter. They will ensure that these are being adhered to. But we want us as a student, as a CA student, how you can contribute positively in this whole process. So to give you an example, maybe as required by SA 300, you will be issued an audit plan, or as required by SA 320, maybe your manager or partner will give you a materiality, a template of materiality and say that this is the materiality level, go conduct the audit. Or for example, as required by SA 315, risk of material misstatement, they will evaluate the entire environment of the bank branch and then tell you and give you certain instructions. So the idea is not to use all those jargons. The idea is to simplify the whole process for you so that you can, as I said, be a part of, a very active part of bank branch audits since you are on the field. Now, Sonal has prepared her presentation based on her practical experience, and she'll be covering some very basic yet critical concepts like planning, checking of advances. She'll briefly brush upon LFAR certificates. And let me tell you one thing, for bank branch audits, it's such a huge topic. It's a mammoth in itself. Ideally, 2 full working days are required if we have to speak about bank branch audit, which we are required to speak concisely in couple of hours. So we'll try our best to cover very critical, very important areas, which bare minimum a first year article should know, should be aware of. Okay, without further ado, I request Sonal to start with her presentation. Over to you, Sonal. Thank you very much.
Thank you, sir. So I'll just share my screen and 1 second. Okay. So a bank branch audit from an article's perspective. So before beginning the session, I would like to ask you all a question. What is the difference between a company audit and a bank audit? Can you all send the answers? Uh, I'll repeat the question. What is the difference between a bank audit and a company audit? Can any of you answer in the chat box?
Chat box is open to all, right?
Yes. Chat box is open.
Yes. Okay.
Yeah, okay. So I've started receiving the answers. I'll just read out a few. Companies audit is governed by Companies Act. Company audit is as per Companies Act, and bank audit is as per RBI Act. Okay. Other than the act, okay, in bank audit we need to check compliance of RBI circulars. Bank audit to verify the deposit and payment. Provision is the main aspect of bank audit. Okay. Okay, so moving ahead, I'll just give a brief introduction of what is a bank audit. A bank audit is a comprehensive examination of a bank's financial statements, transactions, internal controls, and overall operations conducted by an independent auditor. The primary objective of a bank audit is to ensure the accuracy and reliability of the financial information presented by the bank to its shareholders, including uh, shareholders, regulators, and the public. And so, okay, so what is a bank branch audit and how is it different from a bank audit? Bank branch audit, it focuses specifically on the auditing of operations, financial transactions, and compliance of an individual bank branch, while a bank audit encompasses the entire bank's operation and financial statements. A bank branch audit zooms in on the activities and performance of a particular bank branch. Some key areas that we cover in a bank branch audit may include cash handling, customer accounts, transactions such as loans, advances, foreign exchange, remittances, and other banking services. Compliance with legal and regulatory requirements, like you said, the RBI guidelines, internal policies, and some security and controls. Before introducing you to the bank branch audit, I'll just explain a few key terms for a better understanding of the terminology used in the branches. First one being overdue. An amount is said to be overdue if it is not paid on the due date fixed by the bank. Drawing power. It refers to the maximum amount of credit that a borrower can avail from a bank under a specific type of credit facility, such as cash credits, that is a CC account, or overdraft, that is an OD account. It is determined based on the value of the eligible security or assets pledged by the borrower as collateral against the credit facility. It is calculated by subtracting the margin from the total value of the pledged assets. Next is special mention accounts, that is SMA. It is a classification used to monitor loans or advances that shows signs of potential stress or are likely to slip to the NPA at the quarter end. So SMA accounts are categorized based on the duration of overdue payments. It can be categorized as SMA 0, SMA 1, and SMA 2. SMA 0 has the accounts, the loans or advances where the repayment is overdue from 0 to from 1 to 30 days. SMA 1 accounts have loans and advances where the repayment is overdue for 31 to 60 days. And similarly, SMA 2 accounts have advances for which the repayment is overdue from 61 to 90 days. Out of order. An account should be treated as out of order if the outstanding balance remains continuously in excess of the sanctioning limit or the drawing power for more than 90 days, or if there are no credits continuously for 90 days, or even if the account is operated and the balance is within the sanctioned limit or drawing power, the credits are not enough to cover the interest debited during the same period. Next, non-performing asset. So I'll explain this in brief here, but we'll be covering it in a little detail in the further session. So NPA refers to a loan or advance for which the borrower has failed to make interest or principal payments for a specified period. It is a loan account that has stopped generating income for the lender because of the borrower's default. Next is IRAC norms, that is income recognition and asset classification norms. They are a set of principles used by the banks and financial institutions for classifying and managing credit risk associated with their loan portfolio. It helps banks to identify, assess, and classify the credit risk accurately, allowing them to make informed decisions about the lending activities. We will discuss IRAC norms in detail. Next is degradation and upgradation. It refers to the changes in classification of status or loans of financial assets based on their performance and or creditworthiness. Upgradation occurs when a loan is reclassified to a higher performance category. This typically happens when a borrower who was previously considered a higher credit risk improves their financial position and starts making regular payments. While degradation, on the other hand, occurs when a loan is reclassified to a lower performance category. This usually happens when a borrower's financial situation deteriorates, making it more likely that they will default on their payments. Next is moratorium. A moratorium period refers to a temporary suspension or delay granted by a lender to a borrower, allowing them to make deferred payments on a loan for a specified period. During a moratorium, the borrower is required to make regular loan payments, and the lender typically suspends any penalties or fees associated with the missed payments. This is often granted in situations where the borrowers are facing temporary financial hardship, such as during natural disasters or the economic crisis or any unforeseen personal emergencies. So this allows the borrower with the much needed relief by to manage their financial obligations more effectively during the difficult times. Next is MOC, that is Memorandum of Changes. During an audit of books of the branch, the auditor might come across various mistakes, deficiencies, or other issues, which may necessitate correction in the books of the branch. Such audit issues are first discussed with the branch management. After discussion, if the auditor is of the mind that the changes are required and the branch management agrees, the primary responsibility to prepare the MOC is on the branch management, which should be verified by the auditor before authentication. It should be noted that the actual rectification entries are not passed at the branch, they are passed at the head office. While drafting a MOC, the auditor should verify the necessity of the same based on the criteria of materiality, which is generally defined in the closing instructions issued by the bank. Also, the issues noticed in the MOC must be stated in the MOC itself and as an enclosed annexure for the same is to be communicated to the stakeholders and the statutory central auditor, that is the SCA. A few instances where the branch can pass MOC are changes affecting two or more items of the balance sheet, or wrong classification of credit balances in the CC, in the cash credit or overdraft accounts under the advances in place, like it should have been in demand liabilities. Changes affecting two or more items of the P&L's profit and loss statement, or the wrong classification of expenses or income under the wrong head, or changes affecting one item of balance sheet and the other item of profit and loss statement, changes affecting the asset classification or the provisions. So I'll give you a practical example when an MOC can be passed. Suppose the branch has made a provision on a particular borrower as per IRAT norms. But while conducting the audit, the auditor is of the view that the borrower may have to be degraded further due to an ongoing litigation against him, which might affect or which might put a question on his going concern assumption. So the auditor may advise the bank to pass a 100% provision and pass an MOC for the differential amount. Next concept,
I
that
just
is
want to add something.
consortium.
So I'll just add something here. Now,
Yes.
yeah, memorandum of changes or MOCs. This is a very popular word, with branch audits. I'll just take you back to the history of this word. Now, previously, before the core banking solutions or the CBS era of banking industry, they used to have self-balancing ledgers when the books of accounts were maintained manually. In that case, what they used to do is once the self-balancing ledgers were balanced, then any entry or any effect has to be given. It used to be given through a journal voucher, a journal entry. So that journal entry is that concept remains the same even today. After you close the accounts, if any change has to be done in your financials, that has to be executed through an MOC. So you'll see even in your audit report, whichever your partner will be signing, if you just refer that audit report, a summary of MOC will be a part of a part of that report. So that there you will be given what is the effect of MOC on the books of accounts or that particular branch. So you should just familiarize yourself with, how an MOC is passed and what are the effects that are being given there. So yeah, so continue.
Yes, so continuing on consortium accounts. So a consortium accounts typically refers to a group of banks that come together and they jointly finance a large loan or a credit facility of a single borrower. So this arrangement allows multiple lenders to share the risk associated with providing financing for significant projects or transactions that may require a substantial capital, as consortium members collectively contribute to fund these loans, each lender providing a portion of the total amount. So by participating in such a scheme, the lenders spread the risk associated with the financing among themselves, among the multiple parties, reducing the individual exposure on a particular of the potential loss on a particular bank or the lender. This is commonly used for financing large scale projects, acquisitions, corporate expansions, where a single lender may not have the capacity or desire to provide the entire amount. The next term is collateral. Collateral refers to the assets pledged by a borrower to secure a loan. If the borrower defaults on the loan, the lender has the right to seize the collateral of the borrower to recover the outstanding debt. Common types where the collateral is used are common types of collaterals may be included in the real estate sector, in case of vehicle loan, or in case of investments. For example, in case of a car loan, if the borrower defaults, the bank may seize the car of the borrower. We shall discuss collateral in the session. So okay, so the next is priority sector. The priority sector refers to a category of lending that aims to address the socio-economic needs of certain segments of population as designated by the government or regulatory authorities. Priority sector mandates require banks to allocate a certain proportion of their lending portfolio to specified sectors or groups identified as priority areas of development. So here we complete the key concepts that I just wanted you to know before starting a bank branch audit. But if you're performing the bank branch audit for a first time, then what all points should be in your, what all things should you do? So in the present scenario uh, of statutory bank branch audit, one of the most important aspects is proper planning and documentation of the auditing activity. The statutory branch auditor, that is the SBA, should have sound and complete knowledge and the business of the business of the bank. So before commencing the audit, the auditor shall study the following: RBI guidelines and circulars, as bank's closing circular, guidance note, SOP, approach document, and applicable laws. So RBI guidelines and circulars, the SBA should read and study the RBI circulars, master directions, and notifications. This is very crucial and this will help in the proper understanding and execution of the audit. There is an illustrative list of what all circulars you can refer. One second.
Sonal, there are a couple of questions. I'll just quickly answer them. One
Yeah,
is
okay, sir.
by Lakshmi. She's asking, how will branch auditor know that going concern is affected? So Lakshmi, if you are in a branch which has a borrower which is very famous, for example, you can refer if it is in news, you will come to know if its going concern is being affected. But if it is not a very famous borrower, if it's a private limited company, in that case, what you can do is you can refer their financial statements. So typically in the audit report that is signed by the auditor, there is a paragraph on going concern. And if the going concern is affected, it will be mentioned by the auditor in their audit report. Another way is you can also scrutinize their financial statements. If you see that, so for example, if you see that the total equity and share reserves and surplus is in negative, that could also be a threat on its going concern, right? So that is one of the ways you can find out. Another question that has been asked is regarding difference between consortium and multiple banking. So consortium is when multiple banks or various banks come together and together they finance a particular financer, I mean to a particular borrower. In that is a consortium arrangement. Whereas multiple banking is wherein one borrower will go and individually he will go and take loans from various banks. That is a part of multiple banking. Yeah. Go ahead, Sonal.
Yeah, okay, sir. So I'll just share an illustrative list of the RBI guidelines that should be referred by the auditor. So is my screen visible? Like, is it
Yes,
readable?
yes, yes.
Yeah. So the first one is the master circular on prudential norms on income recognition, asset classification, and provisioning pertaining to advances. So this is dated 1st April 2023. This is the latest circular. Check for the latest circular before referring to a previous circular. So I'll just brief what the circular is about. It is a document. It is referred to as master circular. So it is comprehensively, it outlines the policies and guidelines for income recognition, classification of NPAs, provisioning for standard, substandard, and doubtful and loss assets, as well as for the additional provisions at a higher rate than the prescribed rate. This circular also includes the framework for resolving stressed assets and the prudential norms applicable to the restructuring. Second one is the automation of income recognition, asset classification, and processing and provisioning process in the bank. This circular was issued on 14th of September 2020. I'll just brief you. So this notification states that the bank may needs to have a proper IT system in place for the identification of NPAs. And the data generated and the generation of the related data and returns for both the regulatory report for the regulatory reporting and the bank's own MIS requirements. Next is long form audit report, that is LFAR. We shall discuss LFAR in brief, but just to let you know, just for your knowledge, like what is an LFAR? It is a circular which provides which provides formats for the long form audit report, which has to be issued by the branch auditor at the year end. It covers some large critical areas of the branch on which the auditor has to report. We shall discuss this after some time. Next one is the prudential norms on income recognition, asset classification, and provisions pertaining to advances. These are some clarifications issued on the 12th of November 21. This provides clarification on the classification of SMA and NPA, income recognition policy for loans with moratorium on the payment of interest, and also on the upgradation and classification of NPA. And one more circular which I'll suggest you is master directions on priority sector lending. So this was issued on 4th September 2020, but it got updated on 27 July 2023. So just refer the updated circular. This section provides eligible categories and targets under priority sector lending. It also covers the description of eligible categories under the priority sector lending, along with the various certificates that are required to be issued by the auditor.
So Balaji just asked whether priority sector loan is forming a part of branch bank audit. So yes, Balaji, it forms a part of your branch audits as well.
Okay. So now, one second. Planning a bank branch audit. We'll just move to planning process of a bank branch audit.
So before Sonal takes it ahead, I'll just tell you certain things that as a part of audit planning, typically your partner or your manager, whoever is in charge, they will prepare an audit program and share with you. He'll allocate areas and tell you what all are your responsibilities. He'll obtain an NOC. He'll prepare an engagement letter and issue it to the branch. But then there are certain things like you as an article or as a support staff, how you can contribute in the whole process. That is what she'll be covering briefly. Yeah, Sonal, continue.
So bank branch audit planning. The first step is understanding the business of the bank branch. So the auditor should have complete knowledge of the basics of core business of banks and the products offered at the branches. The auditor should study the financial implications of all the products offered at the branches, such as CC accounts, OD, housing loans, vehicle loans, personal loan, business loan, agricultural loans, etc. So the auditor should find out the roles and responsibilities of the branch officials and internal controls in operation. Most of the banks have converted their branches into customer-facing points of contact and sales. And so customer-facing points of contact and sales. And almost all the processing or the decision-making is centralized. Depending on the functions carried out at the branch, the auditor should design his audit plan and extent of verification. The auditor should assess the availability of the physical loan documents in cases where the processing of the loans is carried out from a centralized location, like a loan processing cell or a center. This is important to know because you may have to call for documents from here, or you may have to visit this place for the verification of advances. The auditors should also have a thorough understanding of the RBI guidelines, prudential norms, master directions, and you should be updated with the latest circulars and instructions issued by RBI, including the internal circulars issued by the bank, as I had mentioned earlier. Now, audit planning. So before carrying out the audit at the branches, you should make a list of all the annual returns, financial statements, certificates that you are supposed to verify and certify as a part of branch audit. The understanding the underlying requirements of the annual statements to be certified would help you in designing the plan and audit procedures to be carried out. You should also document the audit plan and conduct a preliminary inquiry to know the branch nature, size, category to be audited. Depending on the nature of transactions executed at the branch, the audit plan should be designed. So the category of the branch to be audited will also help you in understanding the various checks that you need to apply. Example, if it is a large or mid corporate branch or a retail branch or an agricultural branch. So there are various closing forms and certificates which you have to certify as statutory auditors. Understanding the objective of such forms and certificates is essential. You should read the relevant circulars and guidelines before verifying the forms and certificates so that you can understand the process and for what process you should follow in making such forms and certificates. For example, if you are checking the agricultural loans, then you should read the interest subvention circular on agricultural loans. We shall discuss agricultural loans, and I'll again mention that you should read the circulars related to agricultural loans if you are verifying that. This is crucial to certify the interest subvention certificate. So you need to discuss with the branch staff to determine what supporting documents they can provide you, and and the circular will help you understand what all documents you can get so that you can ask for it at the branch. Depending on the audit plan and the various checks required, you should prepare an initial requirement list and share it with the branch. And I'm showing few points that can be included in the initial requirement list. All the returns that you have to submit to the RBI or to the central office because it's a branch. So in the summary and granular form, you should obtain this from the bank. The trial balance, profit and loss, and the balance sheet. The previous period signed copies of all the returns, profit and loss account, balance sheet, and the observations that the previous auditor may have communicated. You should obtain the CCOD and the loan balancing file, the system generated NPA report, and the details of any frauds reported or noticed during the period. You should obtain a list of all advances on the as on date. This list should contain details such as date of sanction, IRAC status, limit outstanding, security details, rate of interest, etc. You should obtain a list generated by the early warning system of the branch during the period. Any exception reports issued, and for checking of deposits, you should obtain a list of the new current accounts opened during the year and ensure that KYC documents are available for the same. This just a note that this list is just a sample. Depending on the audit to be performed, there are many more aspects to be covered in the initial requirement list.
So Harshal is asking, what is a loan balancing file? Loan balancing file is nothing but the list of entire loans facility wise that the branch has issued. It should ideally match with your balance sheet. So the total advances given in your balance sheet in Schedule 9 should match with the whole listing. So that ensures your completeness assertion, which is required in audit. Yeah. Go ahead.
We shall cover what are the points to be covered there in the presentation.
Yes.
So next, while doing the audit planning itself, one second. Yeah, you should understand the banking software that the bank is using. So CBS, that is core banking solution, it serves as a backbone of the modern banking infrastructure. A few softwares that you should be aware of is TCAS, Banks, Finacle, FlexCube. So TCAS Banks is used by State Bank of India, Bank of Maharashtra, Indian Bank, Central Bank of India. Finacle, if you are an auditor of Punjab National Bank, Bank of India, Union Bank of India, Bank of Baroda, Indian Overseas Bank, then you should be know that then they use Finacle, and Canara Bank uses FlexCube as their CBS, as their banking software. The auditor should request a user ID and password from the bank branch, which is exclusively for the auditor. So this user ID must be stamp approved and it shall have the viewing rights. You should have a basic understanding of the CBS used by the branch and or used by the bank. You can ask the branch staff to help you understand that. This will be helpful to you for the following reasons, like the assessment of internal controls, in risk assessment, in your audit planning, in substantive testing, in fraud detection, in reporting and communication, in continuous professional development as well. So overall, the auditor should seek a basic understanding of the software used by the branch. So how the data is entered, how the masters are created, what all data needs to be furnished manually, everything. You should have a basic idea of what all data is entered. This will help you to perform your duties effectively, mitigating the risk and providing valuable insight to the stakeholders during the audit process.
So basically, when you go to a branch, immediately ask those officials that can you please help us with the software, at least let us know the basic commands and how to generate certain reports, how to view certain accounts. If you want to, for example, want to see the statement of accounts, how do we do it? If you want to check certain details that have been entered in the system, how do we do it? So that is something which is which is why they say that understanding the whole banking software is important. You may not have to go into the nitty-gritties, but a basic operational, how the software is operated, that you should just understand. Yeah.
Yeah, so to highlight the importance of understanding the software, I'll just give you an example. So while conducting the branch audit in the December quarter, we were calculating the interest expense for few sample accounts. We observed that there was a difference in the month of December, the interest expense that is being recorded by the branch. We checked and we got to know that 31st December was a Sunday. So the software was not calculating interest for that day. The software was calculating interest from 1st of December to 30th of December. The 1 day's interest, that is of 31st December, was going in the month of January. So this is a lag because the interest expense for few sample accounts for 1 day. But this is a software gap. So this is at the branch level. This is not only at the branch level, but entire bank level. So understanding of the banking software is essential. Moving to audit documentation. So the audit documentation comes at the end, but the auditor should start it right at the time of beginning the audit. He should prepare the audit plan, make the check of the notes to be checked while carrying out the audit process. He should prepare a tracker to list down the queries raised, the responses received from the branch management, and if any further queries and responses were raised, the final conclusion of the audit and the documents received from the management during the audit process should also be documented properly. Examples of audit documentation, which you can do right from the beginning, are audit plan and program with the name of the team members and the areas allocated to them. This will also help you in fixing responsibility and reviewing the audit. So the checklist of various items that you have to check, the checklist in that items, you should prepare. You should properly document your working papers, draft as well as the final working papers. And if you have any discussion with the branch management on any subject, then that should also be documented properly. The letters of confirmations, any correspondences with the branch should also be documented by the auditor uh, in, in the process of the audit. The audit documentation is a real-time process. You cannot do it at the end. You have to do it right from the beginning and while conducting the audit. And the audit documentation should be in a way that is self-explanatory. It should not be very complicated.
Yes. I also want to add one point here. In audit planning, one of the most important things which is often ignored is, referring various reports that are available in the branch. So you ask the branch manager if there is a concurrent audit. You ask them if there are any stock audit reports. You ask them if there are any RBI has come up with this RBIA or RFIA as they call it, that is risk-based internal audit, or a risk focused internal audit. So those reports will be available. So you ask them that, you please provide us those reports. So you also get a lead as to the overall health of the branch, of the borrowers of the branch. So Balaji is asking, is LFI publicly available for all the banks? So no, so this LFI you will be submitting to the branch, which is in turn submitted to the SCAs, and SCAs submitted directly to RBI. It's not publicly available. How to check LFAR then? So for the branch that has been allotted to you, maybe you can ask them for previous year's LFAR. They can give it to you for reference. Yeah. Go ahead, Sonal.
Okay, so moving on to the financial statements of a bank. So as we all know that the bank is not regulated by the Companies Act. The banking company has to prepare its balance sheet and profit and loss statement in the form which is set out in the third schedule of the Banking Regulation Act 1949. The Form A of the schedule is for the balance sheet, and Form B of the third schedule is for profit and loss statement. The balance sheet in banks, when you enter a bank, so they commonly refer to the balance sheet as GL, and profit and loss is generally referred to as PL. So you should be familiar with the term GL, PL, because they just use that. Then moving on to advances, which is a very critical area in banks financial statements. Okay, so lending constitutes a major activity of a bank. Schedule 9 is the for Schedule 9 of Form A is advances, which generally constitutes the largest item appearing on the asset side of the balance sheet of a bank, and it is a major source of income for the bank. So checking of advances, it is not only important from the balance sheet perspective, but also for various returns and certificates that you have to issue and you have to sign as an auditor. Audit of advances is one of the most important areas that a SBA should consider. The SBA must be aware of various functional areas of the branches, its procedures, its process, the systems, prevailing internal controls concerning advances. The SBA should acquaint themselves with the board approved policy of the bank and the advances portfolio composition. When we are performing an annual audit at the bank branch, you are supposed to issue a long form audit report, LFAR, which I mentioned. So LFAR, it deals with the matters that the auditor has to list. So one such matter or one such comment which you have to make as an auditor is on large advances. So now the question arises, like, how does the auditor identify large advances? So as
Sonal, before you go ahead, now there's
yeah,
someone asking what is an SBA. So just for the ease of understanding for the
yeah,
participants, now branch, if you look at the pyramid of a bank, the lowest part is a branch, which is the smallest unit in a bank. Branches, they come together and generally form a region. Then certain regions come together, form zones. In some of the banks, they are called circles also. And then that is all consolidated at the HO level. So that is how the pyramid of a bank is typically designed. Now, SBA is basically statutory branch auditors. So most of you all will be conducting branch audits. So you are the statutory branch auditors, and your reports are submitted to the central auditors. They are known as SCAs, that is statutory central auditors. So they are the ones who are conducting the audit at the HO level, at the head office level, with under various verticals or under various areas which may be issued by the bank. So that is for your understanding, very basic understanding. And also, since we're talking about advances, you need to know advances are the heart of any branch. If you want to know what is the size of a branch or what is the strength of a branch, you just ask them kitne ka advances ka portfolio kitne ka hai. So if they say it's a 5,000 crores branch, or if they say it's a 300 crores branch, so which means ki uska advances ka amount, that is your schedule 9 amount, is that much. And of course, Sonal will take you ahead with some of the sampling techniques. She's also taken an explanation of she's given an explanation of various types of advances also. So gradually you'll understand. Go ahead, Sonal.
yeah. So I was talking about that. I was talking that the auditor has to comment on a point in LFAR, which is on large advances. So to identify, how do you identify the large advances? So as per the revised LFAR guidelines, large advances are those whose outstanding amount is in excess of 10% of fund-based plus non-fund-based advances of the branch, or 10 crores, whichever is lower. So suppose the 10% of fund-based and non-fund-based is amount is equivalent to 9 crores. So it is the lower amount. So as per LFAR guidelines, we have to mention in the LFAR all such accounts whose outstanding balance is in excess of 9 crores. Now, what is fund-based, non-fund-based, we shall discuss. But this is why LFAR should also be studied right from the beginning so that it is easier for you to conduct the audit. The SBA should specifically check the sanctioning, disbursement, review, renewal of advances, availability of the drawing power, restructured cases, credit and debit summation in accounts, daily stamping of NPA, evergreening of loans, etc. This verification will not only help you to indicate the lapses in the selected amount, but it also gives you an indication of control lapses at the branch level in each of the process. This is a this is how the Schedule 9 looks in the as per the third schedule of the Banking Regulation Act. So I'll just read it out. First comes the bills purchased and discounted, cash credits, overdrafts, and the loans repayable on demand, the term loans. Then a total of it. Then secured by tangible assets and covered by the bank or the government guarantees. Then the unsecured assets, the total of it. The next is advances in India, priority sector, public sector, banks, others. Then advances outside India, due from banks, due from others like bills purchased and discounted, syndicated loans, others. This is as per the guidance note issued by the ICAI. Now the audit approach and procedures in the checking of advances. The SBAs in carrying out audit of advances are primarily concerned with obtaining evidence about the following. Amounts which are included in the balance sheet or the GL in respect of advances that are outstanding at the date of the balance sheet, the advances that represent amount due to the bank and are appropriately supported by loan documents and other documents as applicable in the nature of advances. You should ensure that there are no unrecorded advances. The advances that are disclosed, classified, and described in accordance with the recognized accounting policies and practices and the relevant statutory and regulatory requirements. Like one of the audit approaches also to ensure that the bank has correctly classified the advances and performing into the performing and non-performing categories. The auditor should obtain a list of all advances and verify its completeness by comparing the total amount outstanding in the list with the amount appearing in the GL. So when you're carrying out the audit procedure, you should examine that the large advances on a sampling basis. So you have to comment on the large advances in the LFAR also. So might as well select the samples. It will also increase your sample size. What is the large advance will depend upon the volume of the branch. And okay, so the auditor should also obtain a list of SMA-1 and SMA-2 accounts. SMA-1 accounts are those for which the repayments are overdue from 31 to 60 days, and SMA-2 accounts are those for which repayment is overdue from 61 to 90 days. These accounts should be considered in sampling because these are problematic accounts. There are chances that if you do not pay attention to these accounts, they may turn into NPA in the future. So the accounts which are identified by the auditor, you can ignore if the amount is insignificant, but you should pay attention to the SMA 1 and 2 accounts. You can take samples from the SMA accounts and you can detect early warning signals of potential credit quality deterioration of default. This assessing also includes the loan underwriting standards, collateral valuation, provisioning practices to identify areas of weakness or deficiencies. So, in a nutshell, the SBA may need to plan a comprehensive coverage of advances. I'll just provide you with an illustrative list of what all should you obtain as a listing for advances. So is my screen visible?
Yes, it's visible.
Okay, so the listings that you can obtain, this is an illustrative list. Top large exposure accounts, stressed accounts, restructured accounts, unsecured exposure above 25 lakhs. This is as per an RBI circular. Quick mortality cases, accounts that are upgraded and degraded during the previous years or during the current year, the accounts which are adversely rated by the bank's internal ratings, accounts where the issues have been noticed in previous audit reports. You can ask the branch for the previous audit report and you can check the advances which are reported by the previous auditor. Advances identified in the early warning system of the branch and the accounts reported by the concurrent auditor in their reports. You can obtain a listings of all this so that you can select your samples.
So Deepak is asking what can be checked in SMA account. Now SMA account, as she's mentioned, it is special mention account. In some of the banks, they're also known as PNPAs, that is potential NPAs. So what you can ideally do is just look out for their performance in terms of their state. You just obtain their statement of accounts and just see that is the funding regular, is the funding appropriate, are they is it falling short, is it in a position, is it a weak account, and is it at a place where it would eventually turn into an NPA. So that is something you'll have to check in that.
So
Sorry, Sneha is asking, how do we identify all such accounts, stressed and all other? So, Sonal, can you just open your your Excel sheet where you had mentioned about the various kinds of accounts that you can ask for?
yeah.
So top large exposures, stressed accounts, restructured accounts, these are all, if you'll ask the branch to provide the listing, they'll give it to you. Stressed accounts are, of course, you can additionally also do it through your concurrent audit reports, or through as I mentioned, RFI or RBI internal audit reports. There, other sources are, you can just verify their performance through say credit audit report or stock audit report. Those are some of the ways where you can cross check whether these accounts are stressed or not. And also sometimes the internal department of the bank, they will also issue the listing to the branch and ask them to monitor. So that also you can ask. So that's one of the ways of doing it. So Rajendra is asking, if overdue is more than 90 days, is it considered under SMA? No, and SMA 2 is 61 to 90 days. If it is more than 90 days, then it becomes an NPA account, a non-performing asset. Yeah, go ahead, Sonal.
Okay. So yeah, so I was saying, once you obtain all these listings, then you should just do a quick hygiene check of the listings that you have obtained. Like, you can match the total of the outstanding balance with the GL account to ensure the completeness of the list. For in the when you obtain the listings, so there the borrower wise PAN account should be there in the listing. So you can check that the borrower is genuine by checking the fourth letter of the PAN. So suppose the fourth letter is P, it indicates that the borrower should be an individual. If it is F, then firm. Likewise, if it is C, then the borrower should be a company. So such few hygiene checks should be done when you obtain the listings to ensure the completeness of the listing.
So she just clarified, actually, GL is the term that they use interchangeably for balance sheet, basically. So when you go to the branch and you tell them GLPL,
Yeah.
they'll give you a balance sheet and a PNL, basically.
The branch staff, they generally use the term GLPL. They don't use balance sheet or profit and loss. Okay, so once you obtain all the listings, then the selection and checking of samples start. So after the listings are obtained, the auditor has to verify its completeness, and then he has to start selecting the samples for checking advances. You have to ensure that the sample is representative of the overall portfolio, while you focus on the areas where you consider the risk of materiality to be high. So an appropriate sample size is based on factors such as the size of the loan portfolio, the type of loan, the loan tenure, industry sector, geographical location of the loan, etc. So considering, for you give higher focus on the loans which have a higher loan value, but loans to related parties should be considered, or a new originated loans which have originated during the period, and the loans with past due payments should also be considered in your sample selection. So while selecting samples, you can divide it in two parts. the accounts which are sanctioned during the year and the accounts which were sanctioned in the previous year, like that is the existing advances. So suppose you can you list down a few points to me, like what all documents will you check if you are checking a new sanction or a new advance? KYC documents, yeah, KYC, sanction letter, balance sheet, SORSAI, term loan, drawing power, collateral documents, the CIBIL score, limits. Yeah, okay, okay. So I'll also provide, I'll just share. Yeah, this is an illustrative list which you can, like, as you all answered, the relevant KYC details of the borrower are checked and documented by the bank. So when you obtain the sample, you can also ask, for the sample accounts, you can ask for these details. So the relevant KYC details, you should ensure that the new sanction is as per the bank's policies. The sanction letter is obtained by the sanction letter. When you check the sanction letter, you can check details such as the name of the parties involved, the amount, the purpose of loan, the interest rates, repayment schedule. Like, all the terms of the sanction should be clearly written in the sanction letter, and it should be duly signed by both the parties. You should ensure that the disbursement of the loan is also happening as per the sanctioned terms. The type of facility and the underlying checking, which we will discuss further, but this is also where you should consider. Then the balance outstanding as at the year end should be in the system. It should match the limit outstanding as per the files should also match with the system. Charges, if any, charges if created against the borrower, if any, it should also be duly recovered, and you can check that in the statement of account in the system. The interest rates as per the file and the system should match. Security details, as you all mentioned, if the loan is secure, then security, you can check the security. Credit ratings, as you all mentioned, you can check. Insurance details and documents, if it is applicable, you can check. And in case your sample, you are checking the samples from the existing advances, then the points that you should consider are operations in the account if it is as per the sanctioned terms, review, monitoring, and supervision of the account is happening, asset classification, the provisioning is as per IRAC norms. We will discuss this further. You should ensure that the income is also recognized as per the IRAC norms, and the interest rate in the system is as per the latest documents. I'll just show you a sample work paper that we can prepare for the checking of advances. So this is for checking new advances. Is my screen visible?
Yeah, it's visible.
Yeah. So you when you select the samples, just like whatever data the client has provided you, you must copy for the few sample accounts to another sheet. This work paper ensures that all your data is in one place and is in the minute, and it is available to you as fast, like at the time of review you can just link it. So for new advances, so this is the you should ensure that you obtain basic details such as the PAN or the cust ID of the customer, the account number, account opening date, sanction date, the scheme code, the scheme description, and all such basic points. And what is your checking in that? So uh, you can just add an columns next to the statement, next to the listing provided by the bank for your checkpoints. The checkpoints which we discussed, we can just incorporate that over here. So the facility, as per the sanction letter, what is the facility that for the loan? The outstanding balance as per the system. You can just mention it here and you can match it with the list provided by the bank. The limits, you can check it in the file as well as in the system and identify if there is any difference. And you can also write the remarks for the difference. then the charge is recovered. So in case there are any charges which are mentioned in the sanction letter, you can check it in the system if it is recovered properly. The interest rate as per the file and the system, and if there is any difference between them, you can mention the repayment schedule if it is monthly or yearly. The security details as per like the amount of security in the file and in the system, and if there is any difference in it, the credit ratings in the file and the system, the insurance detail in case the loan is insured, then what is the insurance amount appearing in the file and what is in the system, and whether the insurance amount is covering the balance, the outstanding balance. And you should also check the period of the insurance, like it is there on the document, the validity of the insurance, to ensure your borrowing is secured, your advances is secured. And for any particular case, if the auditor has any specific remark or the client has any specific remark, you can also add it in this work paper. And similarly, you can prepare a work paper for the renewal accounts. The only difference in this work paper will be the repayment schedule. Sorry, all these points are same. That you can do the interest recalculation for the renewal cases, because there might be cases where the interest rate as per the file may be different and as per the system may be different. So you can just recalculate and check that. You can also obtain a letter from the bank as per the revised interest rates. The realizable value of the security should be also in your work paper. The repayment schedule, then the financials, you should obtain, like you in case of CC accounts, we generally ask for the financial statements of the borrower. So you should ensure that for the current year and as well as of the previous year, you have the financials, the bank has the financial statements. The stock statements are also available for the CC account. You should ensure that.
So basically,
So
whatever checking you're doing, it's better if you document it in this one particular format. So eventually, when you're making your LFAR, you have to make various annexures to it. Then also when you're giving a review to your seniors, your manager or your partner. So in that case, you'll have all the information handily available on just one sheet. So many people are asking, will these sheets be shared? So yes, these sheets and the presentation will be shared. So don't worry about that. Yeah.
okay. So this was just a sample work paper. You can always add columns as per the checking you have done. And or if the column is not relevant, you can always delete it. Okay. Moving on to the classification of advances. The depending upon the volume and the nature of operations in the branch, the auditor, the advances can be classified into four broad categories. First, fund based, security based, then sector based, and then prudential norms based. We shall discuss all these in detail. And appropriate test checks and should be carried out regarding the classification of advances. You should ensure that if it is a fund based advance, it should be in the fund based advance listing that you have obtained from the client. So fund based advance, it and non-fund based advance. I'll just give a brief of what a fund based and a non-fund based account is. In fund based credit facilities, there is an outflow of funds from the bank to the borrower. Whereas in non-fund based facilities, they do not involve any outflow of the bank's funds. A typical example of a fund-based facility can be term loan or a cash credit or an overdraft, while an example of non-fund-based facility may be a letter of comfort or undertaking or bank guarantees or letter of credit. A non-fund based facility may turn into a fund based facility on the due date if it is not paid by the borrower. For example, development of bills under the letter of credit or invocation of bank guarantee. In such cases, a non-fund based advance may become a fund based advance.
Yeah, that's devolvement of LCs. Basically, if an LC is there and if it
Sorry.
gets devolved, in that case, it becomes a fund-based, and then you have to similarly apply these similar concepts of NPA downgradation. Yeah, go ahead.
So, discussing a cash credit or a CC account, we shall discuss this in detail now. So, a cash credit, it is a facility provided to entities engaged in manufacturing and or trading business. These entities are known as the borrowers. This is to enable them to meet the gap in their working capital requirements. So this is generally granted against a security of stock of goods, net of trade creditors, or against standing crops or bills or book debts, representing genuine sales. The aging of the book debts should be checked uh, in case it is covering in your sample. So the withdrawal in a CC account is permitted to the extent of the lower of the drawing power or the sanctioned limit. The drawing power calculations are revised every 3 months, and it is calculated after reducing the margin which is specified in the sanction letter. The margin is to be reduced from the net working capital. The borrower is under an obligation to file quarterly returns with the bank. The auditor should check the drawing power calculation and whether the borrower is filing the quarterly returns. Uh, the auditor can ask the bank to provide it. The stock statements which are relied upon the banks determine the drawing power, and you should ensure that the stock statements are not older than 3 months. Like if you are doing a quarterly audit, then you must have the stock statements of the first 2 months of the quarter. Maybe they won't have it for the third month. For example, if you are doing the audit of March 24, then you should ensure that the bank has the stock statement for the month of January 24 and February 24. uh, if the stock statement is older than 3 months, then the account is considered as irregular, and the auditor shall request the bank to take appropriate actions as per the guidelines.
So somebody's asking if there is a calculation for calculation of DP, is there a common formula? So ideally, if you refer their sanction letter, there the base you'll understand how is it secured, and based on the security, the DP is to be calculated. So if it is a cash credit facility that has been secured against, say, only stock, so the formula will be different. If it is stock and debtors, the formula will be again different. And if they mention that there is stock, debtors, and there is creditors also in their financials, again the formula will change. So that is something you have to refer the sanction letter for. Yeah.
So in cash credit only, continuing it. So banks usually levy inspection charges on a cash credit account. The inspection charges refers to a fees which is levied by the lending bank for conducting periodic instructions of the borrower's business premises, inventory, and financial records. So these inspections are conducted to monitor the utilization of the credit facility and assess the borrower's credit worthiness, and to verify the compliance of the terms and conditions that are mentioned in the loan agreement. So these inspection charges are recovered by the bank from the borrower at the time of renewal of the account. So as an auditor, you have to ensure while you're checking existing advances, if it is a CC account, whether such charges are debited from the borrower's account. And you can see this in the statement of accounts in the system, in the software of the bank. And then one second, yeah. So overdrafts. Talking about overdraft facility, it is either secured or clean. Clean means without security. And overdraft facility is generally does not carry a fixed repayment schedule. A most common form of security of an overdraft agreement is term deposit receipts, that is FDR, fixed deposit receipts. The overdrafts are granted against other securities also, like immovable properties, life insurance policy, Kisan Vikas Patra, shares, bonds, etc. But in case it is against term deposit receipts, so you have to take care and you have to ensure that a lien mark is being made on the deposit receipt and also on the system, physically and on the system also. It is it is to ensure the care should also be taken to ensure that the interest rate spread between an overdraft and fixed deposit rate is maintained. The banks have to ensure a proper margin. Like you have to ensure that the security value and the loan amount is kept with while sanctioning the overdraft, and at all the times the loan has some security. So basically your overdraft, the rate of interest of the FDR should be lower than the rate of interest at the OD account, so as to ensure that there is a security. You can check in if you have covered, and you should cover an overdraft facility in your sample accounts, and this you can check uh, while checking of the samples.
Right. So if you think from the branch's point of view, if supposedly there's an FD and they are giving an interest of say 6% on that, then ideally the OD that they have issued, they should have rate of interest which is higher than that. Only then there will be a only then there will be a profitable situation for the branches. So that you need to just ensure. Also, I think somebody's asking if there is a format of LFR that we can display. Latest formats would be available at RBI website. Would it be available? So Keshav, RBI, there's a circular which is which specifically talks about LFR. You can download it. I think it is September 21. I think Sonal has a listing. Maybe she can provide you the exact date and the circular format. I mean the circular number. And also, if there's a separate technical guide for LFAR. You can refer that, which has been issued by ICI. So even if you go on the ICI website, you can download that technical guide. There you'll find detailed presentation of what is there in LFAR. And LFAR, of course, will be separately discussed by us. Yeah, go ahead, Sonal.
Okay, so the next fund-based account is a term loan account. Term loans are generally extended for purposes like setting up of plants, acquisition of fixed assets like land and building, plant and machinery, furniture, vehicles, for meeting expenses on education or medical treatment of self or of your dependents, meeting other personal expenses, or for purchasing a vehicle. Like example, a car loan is also a term loan. For purchasing a house or for renovating your existing house. Sometimes you also take a term loan to meet the deficit in the net working capital as assessed by the bank. If there is a deficit in your OD account, you may request the bank for a term loan account. So the bank's policy provides guidance and documentation that they should obtain regarding the end use of the funds. The auditor should ensure that the end use of the funds is as per the bank's guidance. The branch staff should ensure it first, and the auditor should also verify it, basically. So while the disbursal of the term loan may happen in one tranche or more than one tranche means that suppose you have asked for a term loan of 10 lakhs, it is possible that you may ask the branch to provide you with 3 lakhs first, then 2 lakhs, and then the remaining 5 lakhs. So the division is called a tranche. You can also ask for a bullet amount, like for the entire 10 lakhs at one go. The term loans are repayable in installments, which are spread over a period of time, excluding the moratorium period if it is granted. The moratorium period is assessed depending upon the lender, the future cash flows, and the borrower requirements. It is a decision which is made by the bank. So the amount, the periodicity of repayment, the last drawdown date, and other terms and conditions which are fixed at the time of sanction shall be checked by the auditor if it is duly recorded in the loan accounts and the same is recorded in the system. The audit, you have to ensure the compliance of the sanction terms in the system as well.
So Gaurav is asking, should the interest calculation in system also be checked by branch auditor for overdraft balances? Yes, it's always a good
Yes.
practice to recalculate and see. That's one of your audit procedures also, recalculation. So it's always better, although it's system driven, but to ensure that the system is calculating it correctly, it's always better you recalculate it. Right. And yes, as rightly mentioned, OD interest rate will be higher. Yeah. Next question. Go ahead.
So moving on to security-based advances. It can be classified as secured and unsecured. So talking about secured advances, security can be in any form. It can be tangible, intangible, movable, or immovable. So typically the security is of two types, namely primary security and collateral security. Primary security, it refers to a security which the borrower offered by the borrower to the bank to finance or against which the credit is extended by the bank. It is the principal security for an advance. A collateral security is an additional security. It provides the lenders with the additional layer of protection against the credit risk, and it enhances their ability to extend credit to borrowers, especially especially those borrowers with limited credit history or risk or higher risk profiles. They may get a collateral security in addition to the primary security. The auditor should ensure that the security amount mentioned in the sanction letter and in the file is same, if and that it is greater than the loan outstanding amount. This is to ensure protection against the risk of default. The auditor should ensure that the security valuation is conducted by the bank's empaneled valuer before granting the loan. So you can ask the branch to give you the list of an empaneled valuer, and while checking the security value, you can ensure that the valuer is empaneled by the bank. So depending on the nature of the advance, the creation of security may be in the form of mortgage, pledge, hypothecation, assignment, set off, or lien. So I'll explain what a mortgage is. It refers to the transfer of interest in a specific immovable property to secure the payment of money advanced by way of loan. The government mandates the registration of all types of mortgage with the Central Registry of Securitization Asset Reconstruction and Security Interest of India, that is CERSI.
Yes.
The government mandates that all the mortgages are registered under CERSI. So this should be strictly followed by the bank. So the auditor should ensure that wherever applicable, CERSI report is available with the bank at all times in the loan file of the borrower. Example of a mortgage can be a house property. In case you are taking a loan against your house, then the house property papers should be submitted to the bank along with the CERSI report. You can check it in the sample. Next, I'll explain pledge. Pledge is a bailment or delivery of goods by the borrower to the lending bank. It intends to create a charge against the security of the advance. So the legal ownership of the goods remains with the pledger while the lending bank gets the possession of the security. The basic example I can give for this is a gold loan. In case of the gold loan, the borrower has to give the gold against which he's getting the loan to the bank. The bank has to ensure that the gold is kept with it at all times till the amount is repaid. As an auditor, you can ask the bank to show you the documents for the same. Hypothecation, it refers to a creation of an equitable charge in favor of the lending bank by execution of a hypothecation agreement in case of the movable securities. This is specifically for the movable securities of a borrower. Here, neither the ownership nor the possession is transferred to the bank. In case of mortgage, the possession is transferred to the bank. In case of pledge, the possession of the security is transferred to the bank, but in hypothecation, the asset remains with the borrower. A typical example of it, you might have seen behind the buses, there is a board written that it is hypothecated by so and so bank. Yeah. So
Correct.
then assignment. Assignment, it refers to it represents a transfer of the equitable charge in favor of the lending bank. Oh, sorry. Assignment is in case of a future debt. In case of an existing or future debt, it is a right or property belonging to a person which you assign in favor of another person. So, actionable claims such as book debts and life insurance policies are generally accepted as an assignment as in a security. Then lien, Lien is a creation of a legal charge against with the owner's consent, which gives the lender a right to seize and dispose or liquidate the asset against the lien.
So example is like that of an FD. Now, if you obtain a loan against an FD, the bank will or the branch will lien mark that FD, and if the borrower defaults, then that FD will be used to encash and repay. So that's the typical example. Yeah.
So unsecured loan, moving on to unsecured loan. Some checkpoints that you should consider while checking an unsecured loan is review the bank's policy and procedures for origination, underwriting, and approval of unsecured loans. Ensure that the loan documentation is complete, accurate, and it is legally enforceable. You should verify the existence of the loan, the promissory notes, and other documentation. You can confirm that the loan is being disbursed by a proper authority, it is properly recorded, and it is supported by proper appropriate documents. For unsecured loan, you must review the bank system and procedures for monitoring unsecured loans throughout the loan life cycle, and review the bank's provisioning policies and practices in case of unsecured loans. You can cover this when checking the samples. Then sector based. Sector based advances can be priority sector and non priority sector. So priority sector, as I had mentioned earlier, it aims to address the socio-economic needs of certain segments of the population. So the government has defined what all advances should come under priority sector. Example being agricultural loans, MSME loans, education loans, renewable energy loans, or social infrastructure loans. So while a non-priority sector includes commercial and industrial loans, personal loans, commercial loans to large corporates, etc. I'll explain agricultural loans because that is in a higher percentage in banking industry. So agricultural loans, these are provided by financial institutions or banks to farmers and agricultural enterprises to finance their agricultural activities and operations. One of the most common type of an agricultural loan is crop loan. These loans are provided to the farmers to finance their cost of cultivation, including purchasing seeds, fertilizers, pesticides, and other inputs for their crop production. So crop loans can be typically a short term depending upon the nature and the and how they are repaid after the harvest, or it can be a long term loan. So while checking the crop loans, there is an RBI circular which you can refer, or the circular is on modified interest subvention scheme, uh, and it was uh, the date of it is 23rd November 22. It is a circular on the interest subvention. You can read it while checking the agricultural loans. We shall discuss the interest subvention circular while covering the other part of the presentation. So prudential norms based classification based on prudential norms. So these are basically classified as standard asset or a non-performing asset. Standard assets can be further classified into regular accounts, SMA 0, SMA 1, and SMA 2 accounts. And we had discussed what an SMA account is earlier, so we'll move on to non-performing assets. So as mentioned, non-performing asset refers to a loan or advance for which on which prudential it refers to a loan or advance for which the borrower has failed to make an interest or principal payment for a specified period. The auditors should study the master circular on IRAC norms for the checking of NPAs. The last circular was issued on 1st April 2023. You can check if there is a revised circular before beginning the audit. You can ask the branch to share the circular, or you can download it on your own from the RBI's website. I can also share the circular if you want. So now talking about the classification, which is as per the IRAC norms, as per the circular, in case of a term
So
loan.
before you go ahead, I'll quickly
Yeah.
answer these questions. Now, is it necessary to have a CA certified end use certificate or is a company certified end use certificate acceptable? So Shubham is asking this. Shubham, you have to refer the loan sanction letter because there in terms and conditions they'll be mentioning whether the borrower needs to provide an end use certificate specifically to be signed by a CA. So if that requirement is there, then you have to ensure that the borrower is is adhering to this requirement. Now, Gaurav is asking a follow-up question. Usually, transactions happens in overdraft account on daily basis, so balance changes. Is the interest a calculation based on day-end balances of each working day? So yeah, you'll have to take up on a one particular day what is the interest that has been charged. For that one particular day, you'll recalculate and see if it matches. Then the system is working well. If it doesn't match, then you can maybe flag it to the branch. Krishna is asking how we can check that loan is not given to related parties and given without being biased specifically for unsecured loan. So again, when you read the application form, you'll see a lot of details that are being given about the borrower. So if it's a company, then about the directors, about the guarantees that the directors are giving. So you'll have to cross check, if these directors are, maybe you can go on. There are various websites that give you information as to which are the other companies where those directors are residing as directors. So maybe those common companies you can see if there is some kind of relation, but that's again something you'll have to check extensively. It's not like the information may not be available readily. And also you can go and check in their financial statements where they give related party disclosures. So you can also check which are the other companies which have been disclosed as related parties. So these are some of the checks that maybe you can do. I think, yeah. Next, go
Okay.
ahead. Sonal.
So classification as per IRAC norms for a term loan. If the interest or the installment remains overdue for a period of more than 90 days in case of a term loan, then the classification for it changes. In case of a CC or OD account, like a cash credit and overdraft account. So the balance outstanding in a CC or OD account shall be checked as on the balance sheet date. If the outstanding balance is in excess of the drawing power or the sanction limit for a continuous period of more than 90 days, then you have to treat it as an out of order or a NPA account. If the outstanding balance is less than the drawing power or the sanction limit, but the deposits made by the customer is not sufficient to cover the interest debited in the account for a continuous period of more than 90 days, it shall be treated as an out of order or an NPA account. A CC or a OD facility is generally a revolving facility, and the sanction limit is generally reviewed and renewed annually or at other intervals as per the bank policy. So the bank performs a periodical review of the borrower based on his credit assessment. So, for example, if the sanction date is 30th September 2023, and then the review date for the same should be 30th September 2024. In a maximum of 180 days, the limit of the borrower must be renewed. If it is not renewed, then the borrower should be marked as an NPA. So this can be your checkpoint when you are checking a CC account, when you're checking the classification of a CC account. Moving on to agricultural advances. So I'll talk specifically about crop loans. As per RBI guidelines, long duration crops are crops for which the crop season is longer than 1 year, and which are not long duration are short duration crops. So the crop season here refers to the period between seed sowing to harvesting of the crops. So it is determined, the season is determined by the state level bankers committee of each state, depending upon the duration of the crops raised by the agriculture. So in case it is a short duration crop, if the installment of principal or interest remains overdue for one crop season, then you have to classify it as NPA. If it in case of long duration crops, if it is overdue for more than one crop season, then it is classified as NPA. In case of short duration crops, it is for two crop seasons, and in case of long duration, it is for one crop season. In case of natural calamities, the RBI has directed the banks can decide the relief on their own for the relief measures of such advances. Then advances against under consortium. So as discussed, consortium refers to when a group of banks come together to jointly finance a large loan or credit facility for a borrower. A bank with a higher share will lead the consortium, and it will be responsible for computing the drawing power of the borrower. However, the classification is based on the record of recovery of the respective individual bank. So, where the remittance of the borrower under such arrangements is pooled with one bank, or the bank receiving remittance is not parting with the share to the other bank, the account will not be serviced in the books of the other bank members. So, for example, if in case the account is in case a consortium account is divided between three banks and the recovery is happening only in two, then the third bank has to individually classify the account as NPA. The banks participating in the consortium are therefore required to arrange their share of recovery from the lead bank to get a proper recovery, proper asset classification in their books. So yeah, accounts which are regularized near the balance sheet date. So there are cases when a customer account starts getting normal credits and in the balance near the balance sheet date. You can identify this by comparing the outstanding balance of two periods from the list that you have obtained. When the account indicates inherent weakness on the basis of the data available, then the account should be deemed as an NPA. In genuine cases, the bank may furnish satisfactory evidence to the auditor for managing the regularization of the account to eliminate doubts on their performing status. If the account remains stressed during the period and regularized only near the balance sheet date, then you should treat it as an NPA account. In case of government guaranteed advances, in case the advance is guaranteed backed by the central government, then and the guarantee is not evoked or taken back by the central government, and the account remains overdue for more than 90 days, still the account will be classified as a standard asset. But but as regards to the income recognition in such case, it is as per it should be reversed, but like the provision on the amount of the asset will be created as per the standard asset, but the income will be recorded as in a receipt basis. But if the account is backed by a state government guarantee, then the advance is to be considered as NPA if the amount in the account remains overdue for a period more than 90 days, both for provisioning as well as for income recognition purpose. So moving on to income recognition in IRAT notes. The policy of income recognition has to be the objective based on the record of recovery. So therefore, the banks should not charge or take income account should not take into income the interest or fees or classifications on any NPA. The income should be recognized on receipt basis. This will apply to the government guaranteed accounts also. If your advance if your advance includes a bills purchased or the bills discounted and it becomes an NPA, then the entire interest accrued and credited to the income account in the past period should be reversed if the same is not realized. This will apply to government guaranteed advances also. However, if your interest on advances against term deposits and national saving certificates, that is NSC, or Kisan Vikas Patra or life insurance policy, then that income may be taken into the income account on the due date, provided you have adequate margin available in the accounts. Then asset provisioning for NPA. So banks are required to classify their NPA into three categories, namely substandard, doubtful, and loss. So substandard asset is it would become a substandard asset when it remains NPA for a period less than or equal to 12 months. And in case it is a secured loan becoming a substandard, then 15% provision is required. And in case it is an unsecured loan, then 25% provision is required. Doubtful, talking about the doubtful asset. So an asset will be classified as a doubtful one if it has remained in the substandard category for a period of 12 months. In case the asset is doubtful for up to 1 year, then 25% provision is required on a secured loan and 100% in case of an unsecured loan. If the asset is doubtful from 1 year to 3 years, then 40% provision is required on a secured loan and 100% provision is required on an unsecured loan. And in case the asset is doubtful for more than 3 years, then whether it is secured or unsecured, 100% provision is required. In case of a loss asset is the one where the loss has been identified by the bank or the internal or external auditors or during an RBI inspection, but the amount is not wholly written off. So 100% provisioning is required on such assets. Banks should establish proper internal systems, proper technology enabled internal systems for timely recognition of NPAs. The same should be checked by the auditors.
Okay, I'll just take up some questions. Do CC and OD facility provided to agriculture sector also require renewal of facility? Yes, renewal is applicable even if they are agri loans. If they are, as long as they are CC ODs where renewal requirements are there, you'll have to check for their renewal also. Just confirm whether in case of Agri TL and Agri CC, if last credit to the account is more than 36 months ago, then does that account to be classified as NPA? Yes, that will be an NPA. If any last credits are more than 36 months, that is more than 3 years. So as she mentioned, we just have to see whether it's a long duration crop or a short duration crop. Accordingly, the cycle will be either 18 months and 18 months in case of long duration crops and 12, 12, 12 for short duration crop. Three seasons will have to be checked. Swati is asking, in case of new loan sanction, we can check the classification of loans from previous classification. No, but if it's a new sanction, then how do we check the classification from previous? I mean, I didn't get the question. What are some common challenges faced by auditors in bank audits and how can they be addressed? I think by attending webinars like this. And we've also discussed some of the ways where you can, some of the challenges that you'll be facing. So, you have to plan your audit properly. You have to ensure compliance to various RBI regulations, which is what we're trying to help you with. Yeah, go ahead, Sonal.
Okay, so you should note that the NPA classification is borrower wise. It is not facility wise. So in case I have purchased three loans from a bank, maybe a housing loan, a gold loan, and a CC account. And suppose I have a CC account. If in case I default in the CC account, then all the three facilities which I have with the bank will be degraded to NPA. So it is borrower wise and not facility wise.
So what you can do is basically when you visit the branch, you ask them the list of all NPA accounts and just pick up a custody of one of the accounts and just go on to the CBS, enter that account number and see what are the other linked accounts, whether they have also been marked as NPA or not. And one more thing that you need to consider is, so if supposing there are three accounts, one is a substandard account, the other one is a DB1 account, and then the third one is a standard account, then all of them will be marked as DB1 account. That is the worst category criteria will have to be applied. So all the three accounts will become DB1 then. Yeah, go ahead.
Okay, so accounts where there is an erosion in the value of security. So if there is an erosion in the value of security, which is significant when you at the time of significant as compared to the realizable value of security. Sorry, if the erosion in the value of security can be reckoned as significant when the realizable value of security is less than 50% of the value assessed by the bank. Or okay, so I'll explain it with in simple terms. So for example, if the loan amount is 100 and the security value is 150, And if the borrower defaults, then the reassessed security value is 70 rupees, which is less than 50% of 150 rupees. Then the borrower shall be classified under doubtful category. It should be classified under doubtful category. If the realizable value of the security as assessed by the bank is less than 10% of the outstanding in the borrower accounts, the existence of the security should be ignored, and such accounts should straight up sorry, such accounts should be straight away classified under loss asset. For example, continuing the above example, if the loan amount is 100 rupees and the security amount is 150 rupees, and the borrower defaults and the reassessed security value is 7 rupees, which is less than 10% of 100 rupees, the loan amount, then the borrower should be classified as loss asset. Next, restructured advances. So restructuring is an act where for any economical or legal reason relating to the borrower's financial difficulty, the banks grants a concession to the borrower. It may involve modification of the terms of advances, including the alteration in the amount of installments, the repayment period, rate of interest, sanction terms, etc. The RBI has given revised guidelines for the treatment of restructured accounts. The auditor should verify the compliance with with the guidelines of the RBI. The auditor can check additional documents for restructured accounts like the restructuring agreement, and if it is approved by the proper authority. You can also verify the modifications are complied with in the borrower accounts. The banks may restructure the asset classified as standard, substandard, or doubtful. You cannot restructure an account which is a loss asset. So by checking, you can ensure that as well. Banks cannot restructure accounts with a retrospective effect. So once a bank has received a proposal in respect of an account for which restructuring is required, it implies that the account is intrinsically weak, and accordingly, during the time the account remains pending for restructuring, the auditor needs to take a view whether provision needs to be made in respect of such accounts pending approval. Note that on restructuring, the account will be downgraded from standard to substandard. But in case if it is already an NPA, then it will remain in the same category. That is, it will remain in the NPA. Suppose if it is a doubtful account and it is getting restructured, then it will remain in the doubtful category. Upgradation of loan accounts classified as NPAs. So in case a loan account is classified as NPA, it can be upgraded to standard asset only if the entire arrears of interest and principal are repaid by the borrower. In case the borrower has more than one credit facility from a bank, loan accounts shall be upgraded from NPA to standard category upon the repayment of the entire arrears of interest and principal pertaining to all the credit facilities.
Yes, even if it is SMA 0, it's not allowed. It has to be completely standard. So the overdue should not be, should not be even 1 day. That's what you have to ensure in case of upgraded accounts.
So now I'll move to other areas of GL and PL which you should consider. So the branch auditor may apply analytical procedures such as ratio analysis to find out key variances in the financial statements, and then focus on such areas where you have identified differences. I'll just cover a few other areas like the cash bank. So as a branch auditor, you should check that the internal controls are in place in case of cash bank, like the custody of the cash management policy of the bank is strictly followed or not. You should ensure that there is an effective dual custody of cash which is maintained at all times during the financial year. You should ensure that you can also have a physical cash verification of the branch, and if an ATM is attached to the branch of the ATM as well. Then talking about fixed assets. So fixed assets. So the SBA should obtain a FAR, that is a fixed assets register, as on 31st March, with the listing of new samples of the new assets purchased and sold during the year. On sample basis, you can check for additions, deductions, transfer of fixed assets supported by proper bills, invoices, and you can also obtain confirmations as to the date when it was put to use in the bank. And you have to ensure the compliance with the accounting standards as well, the accounting standards related to fixed assets. You should ensure the checking of depreciation on additions and deductions during the year, and depreciation on the existing assets. The verification of fixed assets for furniture, other assets, and reconciliation with the balance sheet amount or the GL amount should be done. The FA management software is used by the bank. You can check that also. The branch auditor should review the reports pertaining to physical verification conducted by the management and comment on their adequacy.
Sometimes this is done at the central level. So generally, sometimes it is carried out by the SCAs. So SBS need not involve into physical verification. All you can do is just check the addition samples, the deletion samples, if there are any sales, whether they are properly authorized or not, and also calculation of depreciation. Although that is done through the system, but which is again central, but you still have to just recalculate for your satisfaction. Someone's asking what is the term of NPA and credit card? That's as per the master circular that's they've given. If it is overdue for 90 days, then it becomes a NPA. Leo is asking in what measurement based on one branch to hold cash in the branch. So there is something known as cash retention limit, which every bank branch is assigned. So that you're supposed to give, that you're supposed to maintain throughout the year. So as he said, it depends on branch business and size and requirement. Right. Go ahead.
Moving on to deposits. So while checking deposits, you can take out samples of the top 20 deposits of the branch. You can check their interest. You can check the interest rate applicable as per the circular that the bank that can ask from the branch, and you can verify the rate of interest that has been applied. You should also ensure the TDS compliance in case of the interest is happening on a test check basis, and if it is submitted properly to the income tax authority. So just a note that there are certain accounts in a branch for which no adjustment or provision is done at the branch level. It may happen at the HO level. So a disclosure of the same, you can make it in the audit report. Now I'll move to LFAR, that is long form audit report. So I'll just briefly some explain what an LFAR is. So it is a detailed audit report prepared by the statutory auditors of a bank. The objective of it is to identify and assess the gaps and vulnerable areas and provide an independent opinion of the auditor to the board of the bank. So it involves commenting on various risks to which the banks are exposed. So it serves as a checkpoints for the auditors and their team members to conduct the branch audit. So you have to comment on the GL, like the comments that you have to give in a LFAR can be on GL, TL, advances, and other matters such as cash, balances with RBI, balances with SBI and other banks, advances, deposits, security items. So the branch auditors are expected to submit the LFAR in the format which is prescribed by the RBI. They have to submit the RBI has issued a circular on 5th September 2020 regarding LFAR. You can refer that for the format. You have to submit the LFAR to the branches in the prescribed format. The central statutory auditor is expected to review the LFAR submitted by the branch, and then he prepares the LFAR for the branch as a whole. So as a branch auditor, you should carefully write the comments in the LFAR with clarity so that if there are any issues in the branch, they are duly brought to the notice of the central statutory auditors as well. LFAR before beginning the audit, so you should just go through the LFAR and just in advance you should just go through it. It is in a questionnaire format which the auditor has to reply, and your replies should be specific. There's a detailed checklist based on the questions that can be prepared, and it can serve as a ready tool for you to verify each area of the audit. So also, I like to highlight that the documentation plays a very vital role in case of LFARs as well. You as an auditor should collect all the relevant and important documents as work papers and to support the views that you have expressed in the report. It should be noted that a specific disclosure, like the extent of checking, the manner of sample selection, the limitations in the document verified, all that should be mentioned in your documentation. In the preparation of LFAR, the auditor should examine and review the previous or reports to ascertain if there were any accounts which were reported in the previous report, the material nature of it in the current year, and if any remedial action, if it was suggested at that time, if it is taken or not. And also note that LFAR is not a substitute to your main audit report and vice versa. So you have to issue both at the time of a statutory branch audit. It LFAR is broadly, it is as per the format specified by the RBI. If the branch auditor feels that you want to make any additional material changes, then you can add it to the scope, but you by giving proper justification for it. Next, I'll just talk briefly about the returns and certificates that you have to that you have to verify and or you have to sign along with the audit report and LFAR. So there is a prescribed format for each returns and certificates. You can obtain a listing of all the returns and certificates that you have to verify and certify at the beginning of the audit and plan your audit accordingly. Also, you can obtain an understanding of each return and circular from the bank management. They will help you in that. I'll just provide an illustrative list of the returns. It is the GL, PL, that is the balance sheet and profit and loss statement, the fixed asset, a return on fixed asset, a return on classification of provision and advances. There are more returns, but this is just an illustrative list. An illustrative list for certificates can be market mechanism, risk-weighted asset, unhedged foreign currency exposure. So moving on to the closing and documentation part of the audit. So as an auditor, an audit is not only required to be done, it should also be evident from the audit documentation that you should maintain. So on audit documentation, it is to substantiate that you have conducted the audit and performed all the procedures, and the audit opinion is based on all the procedures that you have performed. So it is equally essential for you as an auditor to maintain the audit documentation in the prescribed manner. All the documents right from the planning stage, in fact even before the planning stage, like the engagement letter, the management representation letter, the work papers that you make, the draft ones and the final ones, the queries raised and the responses received against the queries, uh, the audit report and the signed documents, they all should be properly documented. All the signed documents, a separate folder for the signed documents should be created, and all the signed documents by the branch and the auditor should be documented. The auditor has to ensure that the documentation is in place before leaving the branch.
Okay, I think I'll just quickly, due to paucity of time, I'll quickly just say something on the LFAR. Now, LFAR, as she mentioned, it is actually nothing but a long form audit report, which is in a form of a questionnaire. And this again, the format has been prescribed by RBI in its circular. You'll have, and as I mentioned earlier, there's a technical guide also available. You can refer that as well. The only thing that you need to ensure as a branch auditor is that you're giving in all the answers, all the replies in detailed format. It should be descriptive. It should not be just a yes or no. So if it is a yes, then explain a few lines. If it is a no, then explain why not. And you can also support it with various annexures. Apart from that, what you need to also understand is now broadly the LFR at branch level is divided in four parts: the assets, the liabilities, the P&L, and general items. Assets will constitute your cash, money at call and short notice, investments in case it's an out it's an for out if it's a branch is outside India, then that particular section becomes applicable, and of course advances. In liabilities comes your deposits, other liabilities like bills payable, sundry deposits, your contingent liabilities. Then your profit and loss account, where there'll be again various items of incomes and expenditures. And general items include again seven areas like golden bullion, books and records, general comments on that, your interbranch accounts, frauds, KYC, AML, MIS, that is your management information systems, and also other miscellaneous areas. So in case there is something which you can't fit in any part of your LFR, you can fit in over here. Just two important points is, like I mentioned before, it has to be very descriptive and very, very specific, very, very descriptive, as in not just a yes and no. And second thing is, it has to be very, very specific. Like you cannot say any generic comments. If you're saying something, please ensure there is a supporting working paper document. And always remember, you should do what you're documenting and you should document what you do. That is something you should always follow while preparing your LFAR. A quick question was, somebody was asking what is there, how to check, what are the things to be checked in interest subvention. So just for everybody's benefit, now RBI has decided to give an interest subvention of up to 3% on loans which are sanctioned up to 3 lakh rupees. So which means basically if the loan is up to 3 lakh rupees, or is up to 3 lakh rupees, then in that case, the interest that is being charged on that up to 3% will be given by RBI. So now there, what do you do in checking while checking? So firstly, you have to ensure the listing of the loans which are eligible for interest subvention. They need to be agri loans and they need to have a balance of less than or up to 3 lakh rupees. You also ensure that the rate of interest is 7%. If it is higher, then there are chances that the account is slightly overdue. So that is something you should check. Also, whenever calculation is given, the interest calculation, you can always recalculate and see whether the subvention amount that is being claimed is correct or not. I think these are just some points you can see. One more question I'll take up. Somebody is asking about EWS, that is early warning signs. Now RBI has issued a list of 42 early warning signs, which typically need to be monitored by each branch, and we as each bank and we as auditors need to see if there is a proper early warning sign system in the branch, whether they have it in place or not. So, and now there are two sources. There are some internal sources and there are some external sources. Internal sources would be something like the CBS, the account operation itself throws some signs. So, for example, if there are high value checks which are being dishonored and frequently, or for example, there are funds that are coming into the loan account from a different, not from the current account, but from some other external sources. So then what could be, that could be a pop-up that the system is giving. Some of the external sources are CRISIL, credit rating agencies like CRISIL, ICRA, they'll throw up some information about the account where they'll capture data like, what is their debt service coverage ratio or what is their debt equity ratio. If there is an imbalance, in it's a sign that the account is weak. So even from ROC, the financial statements, through some financial statements, if there is a change in the key management personnel, those data is thrown. So all these signs are given in that particular system, which the branch needs to monitor, and you as auditor need to see whether they are satisfactorily monitoring it or not. And if they're not monitoring, then you can maybe take up those accounts. I think we'd like to conclude at that, because I think we don't want to overshoot time. So Raj, over to you from here. If you have any questions, we're happy to connect off the webinar.